Get started for today. Our first presenter is Regina. Regina has been a lot of fun to teach this year. We've had one small problem that I noticed this morning. There's a typo on her title. So here was my plan was just to read her title as if there's like as if there's some sort of an idiom or some sort of expression in there that's supposed to make sense, but it really doesn't. It really is a typo. But her title, I'll read it again in a second. First of all, Regina says, I would like to thank Mr. Wade for being my rhetoric teacher and for guiding me through the whole process. I would also like to thank Mr. Abed as my advisor for helping me with my thesis. Lastly, I'd like to thank God, teachers, my parents and friends who helped and supported me in the thesis. Her title is, Oops, AI Did It Again. Why we need to hit a pause on AI in the financial market. It's really supposed to say in the financial market, but I think it's better if we act like you did it on purpose, and then we will reprint that later. Okay, so Regina's going to start in just a second. I'm going to set up the timer, and I'll tell you when you can start. All right, you can start whenever you're ready.
When you were first introduced to AI, what immediately came to mind? Convenience, less stress, less thinking, more speed, and practicality. Now, think about that in the financial industry. AI is changing everything: how we analyze markets, how we trade, and how we win. The majority of the people would take this as a gateway for easy profit. What once took human analysts days to analyze market data, AI can now do in under an hour. The majority people would take this as a gateway for easy profit. However, AI cannot fully control the financial market because of its certain limitations. There is no need to learn. There is no need to spend years learning the basics. Tempting, right? It makes trading seems almost as guaranteed. But what if, instead of a financial utopia, we are creating a system that will go crazy out of control? A world without limitations on AI in financial markets and trading may not be the best bet in this lifetime. The concept of AI dates back to 1905, where classical philosophers have discussed AI on human cognition, then developed into an operational test called the Turing test to evaluate the machine's ability to imitate human decision-making. By the 1980s, AI entered the financial world when James Simons created a knowledge system that could help with trading. In 2000, AI started playing a bigger role in finance, and by 2010, it was a key tool for analyzing market data, and many people believe that it would take over the financial market in the 2020s. But as AI kept growing fast, it also brought new risks, like the 2010 flash crash, which highlights why there should be limits on using AI in finance world. Thanks to technological growth, AI is now a big player in financial trading. By definition, artificial intelligence means machines performing tasks that usually requires human intelligence. With that, companies are trying to reshape the market, giving more people like women, young traders, and small business owners a chance to enter markets that they once used to be shut out of. However, AI in trading still cannot fully or control market operations. That is because the formal financial market is more than just data. It's a system where assets like stocks and currencies are traded and where people connect. Today, some people worry it might make markets more unstable, like what happened in the 1920s stock market crash when too much hype led to a major crash. They fear that without human judgment, it could lead to more problems. Others see it differently. They believe AI can make trading faster, smarter, and open to more new people. So, right now, opinions remain divided on whether AI in finance will lead to progress or potential harm. Traders are still debating whether AI should be just a tool we control or if it should be allowed to run things on its own. Recently, the European Commission has an upcoming policy that will highlight transparency and human oversight rather than banning AI altogether. However, in most countries like the UK, US, and Asia, still lack clear policies. With that, there should be limitations on AI in financial markets and trading for three main reasons. First, the over-reliance might lead to risky outcomes. Second, it's ethical limitations that reduces responsibility. And third, harmonizing AI and human cognition can create a better balance between human, machines, and the market. AI is fast and precise, but as it takes over more of the financial world, human judgment is being left behind. As people rely more on AI in finance, this growing over-reliance raises the risk of unpredictability and potentially dangerous outcomes. Relying too much on AI in financial trading can weaken the market and make society more vulnerable to economic shocks, like the 2010 flash crash, where high-frequency algorithms caused a sudden drop of nearly 1,000 points in minutes. This event showed that AI-driven trading can behave unpredictably in extreme situations, putting participants who uses that method at risk. This creates a moral distance between users and those affected, making people less aware of how their actions impact the financial system and the people tied to it. Moreover, relying too much on AI in trading weakens human judgment, leading to unstable markets. In 2021, the Chinese hedge fund High Flyer experienced losses because its AI models failed to adapt during market fluctuations. Without human traders, AI systems may misinterpret the absence of human traders as a sign of bad sentiment and will continue selling at lower prices. And as human loses the skill to understand markets, disruptions may increase since AI lacks the intuition to consider real-world factors like politics, economy, and emotions. What seems logical to AI might not work in reality. With that, overusing AI in trading can create big risks by making everyone act the same way, which hurts competition and makes the market unstable. Since AI tools spread fast, many traders use similar models and make the same moves. For example, if AI signals to sell, lots of traders will sell at once, causing market stress. As seen with High Flyer, rapid tech expansion led to firms adopting the same strategies. This behavior is often driven by human greed for quick profits. Continuing this behavior could lead to algorithmic collusion, while algorithms learn to engage in anti-competitive behavior. This could cause severe damage to the market and jeopardize other market participants. Moving on to the next argument, AI in the finance market lacks ethical judgment and the ability to take responsibility. To start, AI doesn't wake up in the morning with a sense of morality. AI lacks ethical reasoning and cannot understand the moral impact of its actions. It does not feel emotions or take responsibility. It simply follows patterns to find profit. This focus on efficiency means AI ignores fairness, long-term consequences, or the people affected by its decisions. The system does not understand the boundary and constant trade-off between exploration and exploitation. Since AI is designed to find the most promising strategy for improving an individual portfolio, its technical nature limits it to focus solely on that goal, which often ignores any other considerations. This could worsen ethical dilemmas in finance rather than resolving them. Unlike humans, it cannot choose to avoid short term gains to prevent future risks. Furthermore, AI cannot take full responsibility of its actions. While AI can make trades, it struggles when something unexpected happens in the market. Since market conditions constantly change, and events like natural disasters can disrupt AI predictions. For example, in 2013, a fake tweet about an explosion at the White House caused AI-driven trading system react instantly to purchase it as the market is dropping significantly. This happened because AI learns from online content and past data, which can be misleading or false. In fact, in lab testing, researchers found that human help is still needed dealing with evolving conditions. Therefore, AI should be used as a tool, not a replacement for human decision making. AI has exceeded the capacities of most humans because of its computational and analytical capabilities. However, its constantly evolving force is making it harder to be reliable. The best results come when humans use AI as a tool to deal with large information quickly. By combining both, we get smarter, more balanced decisions in finance. Let AI do what it does best and let people do what they only can. Lastly, harmonizing AI and human intelligence in financial trading fosters a more balanced and thoughtful approach. AI brings speed and data power, while humans bring intuition and judgment. By combining both, we can build a healthier, more ethical financial system that supports both progress and people. In considering this further, bringing together AI and human thinking can help shift financial trading towards long term value and not just quick profits. The financial market has long served as the pulse of the economy, reflecting improvements in societal living standards and functioning as a space for trading. It impacts daily life by engaging individuals directly as traders and through company goals. As Cockburn points out, responsibility in finance isn't just about making decisions. It's about being accountable for their impact, especially when AI is involved. Traders must be seen as active participants whose decisions preserve and enhance the market's value, aligning financial activity with broader human and ethical goals. Beyond this, human qualities such as analytical skills, emotional intelligence, and intuition in financial trading gives the market a dynamic touch. Research in behavioral finance shows that individual behavior and emotion can positively influence market outcomes. However, concerns have arisen that fast growing technology could break up the market and make it unstable. Policies like the US CEC's best price rule aim to ensure transparency and efficiency in the market. As trading becomes more automated, there's a danger of path dependency, which could disrupt market stability. Therefore, traders must not only understand market models, but actively contribute to its performance. These human traits are key to keeping the financial market stable and flexible and to preventing the dangers of unchecked AI. To end, the result of harmonizing AI with human intuition helps traders build skills, resilience, and a love for learning. Philip, CEO of Lanza, says passion for learning is key to staying motivated through setbacks. This is especially important in trading, where markets constantly change. Traders who stay curious and keep learning can bounce back from losses, adapt to new challenges, and make better decisions. Even as AI become more involved, it's the human drive to grow and adapt that leads to long-term success. As finance become more complex, emotional intelligence and human insight will always be key to success in a complex financial world. Some people might say that new technology always brings change that causes disruptions, so there is no need to limit it. For instance, automation in manufacturing, which has boosted productivity with workers now producing 47% more than 20 years ago. The IMF also notes that AI's ability to process fast data rapidly has gained significant interest. However, this kind of impact varies. In sectors like manufacturing, automation enhances efficiency because it has fewer ethical concerns. But the financial industry faces higher risk due to its reliance on data integrity, privacy, and regulation. If the AI driven system is mismanaged, it can raise ethical and regulatory issues. A 2020 example involved a hedge fund with an AI trading algorithm that struggled during the COVID-19 market chaos. The AI, unable to adapt to extreme volatility, led to catastrophic losses. This case shows that not all AI advancements yield positive outcomes, especially in unpredictable environments like the financial market, which is far more complex than other industries. Another might argue that strict regulation is the best solution for AI. But while this may seem practical, heavy regulation might not be effective. The relationship between financial innovation and regulation is complex, and historically, regulators have struggled to keep up with rapid technological changes, making it harder to create adaptable long-term policies. Regulation tends to be reactive, meaning by the time new rules are established, AI strategy systems have already evolved beyond them. While regulation aims to ensure stability, overly strict rules could stifle innovation, preventing AI from fully enhancing the market. A more balanced approach would allow AI trading to develop with appropriate oversight, maintaining flexibility in evolving regulatory environment. Throughout this thesis, we have discussed why limiting AI usage in today's society is essential, addressing the risk of over-reliance, the diminished role of human judgment, and its ethical reasoning in machines. We also explored the potential for a more stable financial market through the collaboration between AI and human cognition, where limitations act as a security and not barriers. As the saying goes, a tool is only as good as the hand that wielded. AI, no matter how powerful, lack the wisdom and responsibility human oversight provides. If we blindly trust AI to govern financial markets, we risk prioritizing efficiency over integrity, which endangers traders and market. Without limits, AI could replace human expertise, leaving us vulnerable to unpredictable financial disasters. While policymakers and financial institutions hold the power to regulate AI, we as individuals also have a role. We can support transparency in AI-driven systems, advocate for regulations that ensure human oversight, and stay informed about the risks AI poses to market stability. Ultimately, financial markets should serve humanity and not be controlled by machines. It's up to us to ensure that technological advancement enhance rather than replace. Let's be mindful and responsible in our use of AI as its impact will resonate across society. Thank you.
Thank you, Regina. Our panelists today are Mr. Hans and Mr. Zorin. I will let Mr. Zorin go first.
Thank you, Regina. One with the longest name there is, and one with a soft-spoken speech. Thank you. Let's get on with the question. Yeah. I've read your paper, and I found it a well-read material. I do want to clarify some terms. You mentioned a lot about AI, but you haven't really focused on the aspect of the financial market. which side is it? Is it investing or is it trading? And if you choose any of them, can you maybe elaborate why AI is better used on that aspect? Thank you.
Thank you for the question, Mr. Zorin. So, in my paper, I focus more on the trading side, like stocks, currencies, and I choose to put limitations on the usage of AI because, in my opinion, if we fully implement AI on trading, it also reduces like our work. So there's a crisis in 2008, which is a global financial market where it impact everyone, and it's also the cause because it's of human error because of housing bubble, which is about that stocks about houses that can bought, but it became bad because they have bad debt. Those are debt that haven't been paid, but they can still keep on buying the stocks. And in that is because of human error. So in my thesis, I want to clarify that I'm not shaming AI or human, but I want them to coexist. So, like, if in the past, in 2007 or 2008, AI have already exist fully like today right now, maybe it would reduce the financial impact in the world.
Okay, so I think from your argument, you want to use AI to stabilize the market more, right? Because the
Yes.
market is quite volatile, stable, and in some ways can kill people, actually. Now, I do want you to maybe ponder on this possibility. Yeah? You know, AI is getting much more developed. In the next couple of decades, uh, it's quite bizarre. Yeah. Uh, Suppose that in the future, AI can make a brain scan of my brain, and so it can be an AI agent of Mrs. Zorin AI, and so this AI agent can invest in my behalf because it's basically my copy but in digital world. Do you think that's ethical? If not, or if yes, I want you to argue in that respect.
Thank you for the question, but if we see it from today's perspective, I don't think it's ethical yet because a lot of people are still debating on whether AI can actually do good to people or not. So, seeing from today's society, I feel like if there is an AI of Mr. Zorin, I feel like it would still be unethical to implement it in the financial market.
Okay, but what if I can purchase an AI model of George Soros or Warren Buffett or Bill Gates? They have the best capacity, the best insight, they have years of knowledge. It's basically 100 times profit, right? I put my money into that AI model and let it invest. Let me do my job, let me do my activities, and let it make money for me. Would that be better? I mean, it seems to be ethical, right? It's legal, it's also there in the market in the future. What do you think?
So, in my opinion, and based on my research and journals that I have read, that at, in a glance, it seems very tempting to like just buy a copy of AI of someone successful and use their brain. But however, that um, that opposes the actual definition of trading, which includes like learning and based on like past experience and knowledge that they receive from the market.
So yeah, you're basically saying it's an art, yeah. It's a human thing. It's hard to
Yes.
be replaced by. Okay, good answer. Now, the next question goes with. Let me see it properly. Um, IBM says in the past, in this 1970s, it's a visionary kind of quote. Computers can never be held accountable, therefore must never make managerial decision. So, as far as I know, recently it may not be financial per se, but some tech companies have implemented AI into their companies to see the KPI, the score, the performance, and all that, and fire people on behalf of the company. They use algorithm to find that, and it's basically have made people protest against the companies because it's just so unfair. Yeah. But then it's people, not money. I don't find this issue seems to be that bad because remember in the past, sorry, I think let's just go to the next question. This one is much more better. Have you heard about something called robot trading?
Sorry, what?
Robot trading?
Robot trading? No.
No? Oh, okay. Next one. Maybe something more specific. So in what way this AI can help stabilize the markets? Can you maybe provide the specifics? Yeah, because AI can be like such a buzzword, like AI all the time, and as if it solves everything. But then, can you maybe give me the specific ways it does the solution to the market? Thank you. Yeah, maybe that's my last from me.
So to answer that question, AI can be used as a tool in the financial market. For example, like it can be used like as a financial advisor, where like they can analyze for example, in the stock market, they can analyze the candlesticks and like there are a lot of patterns of the candlestick stocks, right? So they can analyze it for like the signal on what to come. But in the end, like before we execute the trading, we as human also need to see like the global aspect, like what is happening in today's world before deciding to sell or buy. Because like our economy might be bad right now, so even though AI advise you to buy, it might not be a good thing in the long term.
Right. Thank you, Mr. Zorn. We'll move on to Mr. Hans.
Hello, Regina. Great speech. And I would like to just follow through with, I would say, some of the questions Mr. Zain said. But before that, I would like to clarify just one last thing. Maybe if you can summarize it more succinctly. Now, once again, why is it necessary for there to be human element into this financial trading market? And you would say it's the stock trading mainly, right? Yeah. Why is it necessary, once again?
Thank you, Mr. Hans, for the question. So to answer that question, there is actually a Chinese hedge fund strategy which is called High Flyer, and their trading is only mainly focuses and rely on data and models and not human judgment. But in that High Flyer, there's a crisis in 2021 that happened where when AI models cannot adapt to market fluctuations, which makes the users who use that hedge fund strategy also loses its money. So, in my opinion, there should be still human judgment to reanalyze everything and rethink like the ethical solutions before executing the trading.
Right. Thank you, Regina. So to follow through with that question, so I think you've made your case as to why is it important, right? Because when these algorithms, when they're just left with their data without human intervention, then it is prone to lead to crashes. But then my next step is this, right? So you've mentioned all the virtues, right? The human, fairness, ethical considerations, and so on. Now, I would say a big question that I would have is, why can't we teach this to the AI? Why can't we feed this into part of their data training, right? Okay, for example, I think you've mentioned one example where they checked a fake tweet on a White House explosion, which causes them to like, oh, everything's gonna crash, sell everything, right? Well, that's the whole point, right? AI is machine learning. They have this fantastic feedback loop where they learn, okay, if the output is bad, we can keep learning and learning. And it seems here that what is looked for is the outcome of that virtues, right? To have that judgment, to have that intervention is to just manage things. But once again, why can't we just teach AI on these ethical considerations? Oh, you have this to follow, you have this to follow, you have to make these kinds of judgment. Why can't they do that?
To answer that question, actually, based on my research, like in the researchers in lab simulations also mentioned that it is extremely hard to implement ethical implications on machine learning because ethics differ by society. So it does not, and machines learn by data that, like true data that has happened. So there might be like some ethical points that haven't been pointed out that AI still cannot learn. And moreover, AI also process things only logically and instantly, so it does not really fit the ethical implications.
Right. Thank you, Regina. Interesting answer. And I am reminded that yes, ethics are different based on culture, based on religion, and so on. But then, just a little bit more, I would like to push a little bit more is that, like it or not, when we talk about our emotions, human emotions, and so on, I would say that that is a part of logic, right? I would say, well, there is logos and pathos. I think you are aware of that. But then I would say that pathos is logos in a different sense, right? But then it's not like, okay, the evidence says this, therefore this is my conclusion. But then the way I see it is that, let's say, I am sad, therefore this, which just takes from a different set of evidence. So just to push a little bit more is that, is it possible to teach AI to have, let's say, for example, right? We actually put quote unquote weight considerations. Let's say this stock involves 50 million trading volumes, but then the other stocks only involves 30 million trading volume. Seeing that more people are involved in the first stock, then if let's not mess with that, let's mess with the one with the lesser one. Is it possible to teach AI to do that, to make those kinds of considerations?
Sorry, Mr. Can you rephrase your question?
Apologies, it might be a bit long, but once again, is it possible to, let's say, at the very start, start with one, which is the human cost, right? I think that's something that you referred to teach AI that, okay, these are the human costs of your decisions. Like to input those data based on the previous crashes, right? You can see, oh, 50 million people lost their money. So maybe from that data, you can train the AI that these are not the things that you should do. So is it possible or is it still not?
Thank you for the question, but based on my research, I haven't really researched that part a lot. So, but in my opinion, I feel like as of right now, AI still have its limitation even on machine learning, especially in financial market, because even before AI, without AI, the financial market itself is already a complex world. So, to AI to fully like learn it, it's going to take lots of years. So right now, I don't think it's possible yet.
I think that'll be all from me.
All right, good job, Regina. Let me ask you a few questions. The thing, you talked a lot about how AI doesn't have the human touch, the emotional side of things, and all of that. In many ways, that's the part of the stock market that scares me the most. In other words, let me explain what I mean. If Microsoft announces that they're for the quarter, their earnings are reduced, right? Their stock is going to go down in value, right? Well, why is it going down in value? Is it really because people are trading because their earnings are down? Actually, no. People are trading because they know other people are going to trade. So it's all this risky prediction stuff. I'm going to sell my Microsoft because I think everyone's going to sell their Microsoft until it goes to a certain point. So it's all this prediction based on emotional stuff, and it's actually what fuels a crash, right? People get panicked, and it's the emotional side that fuels the crash, right? Because nobody wants to be stuck with worthless stock. And so I'm wondering, is it possible that in the future, AI could fix that and get rid of it? to me, it's all built on such a flimsy foundation. Maybe AI gives it a strong foundation where stock values are more linked to the value of the company instead of human prediction and emotion. What would you say to that?
In the future, I feel like AI can be also a foundation in financial market, but still, AI also have some weakness and strength, which if we combine with our human cognition weakness and strength, I feel like it will be a balance of strength. So even if like our emotions can deeply affect the market, with AI's analyzation through past data and markets, it could make a better foundation.
Thank you. And, I think that's a good answer. And I think that for the current situation, AI scares me just as much as the weak foundation of the stock market, because it seems to me that AI, put in the hands of someone with a lot of influence in the market, could actually control the market, right? What do you think about that? Are there AI tools, and you mentioned collusion and things like that, that could actually control the stock market?
So as of right now, and based on my research, I have not found really one full like AI-driven trading system, but it's only some tools that add to it. But maybe in the future, like a tech company will develop a fully AI-driven system.
Okay. Yeah, so and that kind of worries me, right? Because if most of the world is trading on human prediction about what others are going to do, and one big AI firm comes in and takes over, it just feels like they could control the market, because they can get me to sell if they want me to sell. They can get me to buy if they want me to buy, right? Do you agree with that?
Yes, I actually agree with that. But also, human can also do that, like what Trump did, the recent news. Um, he he's he sold like stocks to with his friends, which is actually called an insider trading. And in ethical stances, that's also actually bad. So
Yeah, in America, there are a lot of ways that people sort of get around the insider trading world. And so, for example, people who own businesses, they, instead of trading when things are good or bad, they trade their own stock regularly on a monthly basis, so no one can accuse them. And that's kind of the way Americans try to get out of that. A lot of your peers are asking this question: how do you really limit AI in the trading world? Even, I mean, there's two things, right? You can see AI systems making trades themselves, but if I'm a stockbroker and I got an AI system here, I can push in the trade button, but nobody knows I'm using AI, right? So how do we really limit it? What are your ideas about that?
So in my opinion, we can limit it through actually a few regulations in the system itself. So it's not like the regulation for the people, but inside the system itself, so it can be regulated, so it can be used in an ethical manner.
Okay, very good. And let's see. Yeah, so it also seems like, the more AI is controlling things, the more likely we have some big breakdown and some big error that causes things to just go nuts, right? How about that? Is that a possibility? You know what I'm saying?
Not really.
In other words, if AI is it's computer based and it's algorithm based and it's learning based, but what if it's hacked? What if it does something that doesn't make sense because somebody's hacked it, right? Couldn't they disrupt the whole stock market?
Yes, they actually can if it's like hacked. So that's why we need to regulate the system itself.
Okay, good answer. Okay, we're out of time. Thank you so much, Regina. You've done a good job. All right, so we will meet family and friends over here for photos. We will start at about 10 minutes after 10 with Keenan. So we'll have a little